Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. We've been doing quite a few interviews focused on the EV market, commodities like cobalt, nickel, lithium, and then other metals that are included in the electrification movement, things like copper, vanadium, manganese. Back with us today as an expert in the space to talk to us more is Anthony Milewski. He's the head of Cobalt 27. Anthony, welcome back to the program.
Colin, thanks for having me, buddy. I always enjoy coming on.
Yeah, I think what you've done in a short period of time in the cobalt space is extremely meaningful. I was talking to Rick Rule the other day. We just put an interview out with him, and he was extolling the same thing that several people knowledgeable in the space have been saying, which is cobalt presents a picture for commodities unlike any other commodity that they've ever seen, in that there is no primary supply. There's this huge demand, and the prices have been skyrocketing, but people think that they're going to continue going up, and that's kind of an interesting picture. I thought starting out today, Anthony, we could talk about going back a couple years when your interest peaked in cobalt, and you started getting into the space and actually buying up all of the physical cobalt you could get your hands on, and maybe tell that story for listeners that don't know, and then update what's going on in the EV market. So, Anthony, if you want to start out just kind of talking about the inception of your whole interest.
Yeah, no, look, appreciate it. I mean, it's a funny story. Several years ago, we were sort of sitting around thinking about what the future would look like for basic materials. The super cycle had ended. Everyone was depressed. And, we started to think about semiconductors and, all sorts of different technology and what would be impacted and how it would be impacted. And, sort of arrived at a framework. And the framework was around disruptive technology. And what I kind of decided was that, in order for disruptive technology to kind of displace whatever the other technology is, there's a couple factors that are important. And in the case of the electric vehicle, when we were looking at the electric vehicle, the first factor, of course, is price. What does that vehicle cost relative to the other vehicle? And then the second factor was utility. And utility for an electric vehicle is how easy is it to charge, and how far can that vehicle go on a single charge. And what's interesting today as we sit here is that the electric vehicle is almost at par, cost almost the same on a like-for-like basis now. And so that the cost kind of barrier has fallen away. And in terms of utility, the average new electric vehicle that's being rolled out now goes further than 99% of all commuters in a day. And the infrastructure in America allows you to drive across America charging. And so the big kind of obstacles to the adoption of the EV have fallen away. And I think 2 years ago, what we really identified was what the obstacles were. And we took a view around whether or not those obstacles were truly going to fall away. And we saw rapidly, even 2 years ago, declining battery prices. And so we identified cobalt and immediately set out to invest in a cobalt mine. And what we found is that there's really no such thing. In the entire world, there is one primary cobalt mine, and that's in Morocco. And, we kind of looked around, and there were exploration projects where there was a material amount of cobalt and, some interesting nickel plays out there, a Giga Metals where there's a huge nickel cobalt, in particular cobalt credit, a Sherritt, even a Glencore for 13% of EBITDA today. But none of those options really satisfied our interest in getting cobalt exposure. And so I had been a participant in the last uranium bull market and had traded Uranium Participation Corp. And so my idea was really fundamentally to create Uranium Participation Corp meets Franco-Nevada. So to really have an iteration or an innovation on a financial instrument. And what I knew for sure is that in order to start a streaming company, it's very hard to get an MOU on a stream and go out and market it because your counterparty won't allow for that. So what we did was we went out and started to buy cobalt, and we bought it in small amounts, 10s and 20s, 30s and 40s in terms of metric tons. Adding it together, we found partners where we could get options and really spent a couple years pulling together tiny incremental amounts of cobalt to have enough cobalt for the IPO last June. And that's really why there's such a premium for the position that we have today if we were to sell it to consumers, is that there is no other analogous position in the world save it for the Chinese government position. And so if you need a large slug of cobalt and you need it tomorrow, we spent a couple of years putting that together. So in June, having kind of gone through that process, we IPO'd it last year. And then the second tail of that work was really in December when we did a $100 million bought deal and bought the second slug of it, bringing it to 3,000 metric tons. So the culmination of a couple of years worth of work. And then earlier this year in February, we did our kind of really first royalty of note, which was a nickel cobalt royalty on one of the largest, if not the largest, nickel cobalt development project in the world, shovel-ready Dumont. And last month we raised another $200 million to actually invest in streams. And so the evolution of it started off really as identifying what we thought were the barriers for the adoption of a new technology, namely electric vehicles, making that right call and getting ahead of the move by starting to acquire the physical and put in place the foundation for the streaming and royalty business, which has followed.
At this point, Anthony, how much physical cobalt does Cobalt 27 possess, I guess in terms of dollar and tonnage?
Yeah, so offhand, it's around $370 million or 3,000 metric tons. We've focused on brands that are readily dissolvable into the chemical industry, in other words, into the battery industry ultimately. And so we have a position that really we think gives investors leverage to the thematic, because ultimately we think the best proxy for the adoption of the electric vehicle is cobalt. Like, I don't know if Tesla is the winner or Umicore is the winner or NVIDIA or GEM or Ford. But what I know is so long as there is a winner in this EV race, the basic materials that comprise of the EV are ultimately winners. And we think the best proxy among those electric metals, as you want to call them, is cobalt.
Anthony, as a company holding just physical cobalt in a shortage market, you would be an obvious takeover target, assuming that your market cap's trading near the amount of cobalt you have. You're obviously aiming to build something much more dynamic at this point. You mentioned adding the streams and the royalties, and this seems like a even more levered and direct way for the investor side to play it. How does that change the outlook for maybe an eventual takeout target? Who would be looking at Cobalt 27 to pick up? Or have you not even
so actually, it's a great question, Colin. It materially enhances the potential for a bidder someday. And the reason is as follows. If you buy Cobalt 27 and it just has a physical position, well, that's a one-time buy. When, if you take, for instance, the royalty on Dumont, that's forever. If that mine goes 40 years, it's 40 years. If you get a life of mine stream for 30 years, 25 years, whatever the life is, that means that every single year you get X tons delivered to you until the end of that stream or royalty, or excuse me, to the end of that stream, or you get the exposure through the royalty as well. So I think what it does is it really then makes us interesting to OEMs and Western automobile makers, because our entire business is outside of the Congo. We think that the Congo is just a bit too hard for us. There are people who are able to navigate it, but we don't think that we're able to do that. So our entire business operates outside of the Congo. And so in a world where there are issues associated with the mining of artisanal and child labor, conflict cobalt out of the Congo, not to say all of it is, but certainly a portion of it is, we've decided to stay out of that mix. And so consequently, if you're a Tesla or a Ford or a Volkswagen and you want flows outside of the Congo, we're going to be your only choice. Save it for buying a massive nickel mine, which is probably not suited, or probably most automakers aren't suited to do that. And so we think that this strategy actually creates tremendous shareholder value over time. Not only because, and I'll give you an example, the GDX is down 50% over the last 10 years. However, Franco-Nevada is up 300%. So, the streaming model gives you tremendous upside. But in addition to just the streaming fundamentals and how the streaming companies trade in Canada, you have the real potential for a takeout bid from somebody who actually needs the product. And that's very unique and interesting.
In terms of the cobalt supply at this point, with cobalt up significantly now over $40, What are you noticing if people are trying to get a hold of cobalt? I mean, manufacturers of these cars, is it still just as tough, or are things loosening up a bit?
Look, when and I was just with one of the largest battery makers in the world a week ago, and I asked the individual, I said, have you seen cannibalization of demand due to the price of cobalt? And I can tell you they said definitively no. So the price of cobalt isn't impacting, or cannibalizing demand for it. Instead, I think what it's doing is bringing an awareness to the need to develop projects. So when I look around the world, I think about clean tech and Dumont and Giga, which is the Turnagain deposit in BC. These are all names that are going to see capital inflows. In the case of clean tech, they've already started construction. In the case of Dumont, I think they're getting ready to construct. Turnagain, I was speaking with the CEO on Friday, and he told me that they're going to have a revised PEA this fall, which is with a much smaller capex. So, the implication is that in order to have more supply come online, projects, in particular nickel projects outside the Congo, are going to need capital to get built. So I think you're seeing that happen. Inside of the Congo, obviously, projects like RTR and Katanga will be ramped up over the next 5 years. We know Shalina, a private company, also is planning to expand. So I think the higher price means that over the next 5 to 7 years, you'll see incremental production. What I think is interesting, though, is that, when you look at Wall Street projections, right now you have anywhere between 8 and kind of 20% is the penetration rate in 2025. The lowest number I've seen is 4%. The highest number I've seen is 30%. At 15% penetration in 2025, you probably need a doubling to 2.5 times today's cobalt market. That's depending on when we get a chemistry change shift from the 532 to the 622 and eventually the 811 and some of these factors. You're looking at a minimum of a 200,000, 250,000 ton market. Today the market is 100,000 tons. However, if you just take the raw data from a base of 0, we're at 1.8 penetration for new EV sales today. If you extrapolate that growth curve, we're likely to be closer to 30 to 35% penetration rate in 2025. And that is going to blow everyone away in terms of not only cobalt, but also class 1 nickel, copper, and lithium. And so what I would just kind of tell people is step away from whatever the projections are from analysts and maybe have a look at where the actual numbers are guiding you. And if they're right, and if we continue at this growth rate, then the demand for a whole suite of these basic materials is going to be tremendous.
Anthony, I know that you're heading on a trip. You're going to be heading over to China and meeting with a lot of the groups that are close in the space, getting a pulse on all of these metals. I think it would be a good idea to keep this conversation strictly to cobalt and what you've seen, and then maybe get you back on the program in another week or two to get an update on your reconnaissance work. Does that sound good?
No, that's great, Colin. Yeah, we'll be. It's a pretty amazing trip. We're going through Asia, seeing the big automobile makers, cathode battery makers, traders. So I think it'll be interesting conversation when we come back in a week or two.
Excellent. Well, Anthony, thanks so much for coming back on the program. Best of luck on your trip, and looking forward to catching back up on the other side of it.
Thanks a lot, Colin.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?